Live from our studios here in Kokomlemle, Accra. This is JoyNews and you're welcome back. And of course, this is Ghana's leading business analysis program, Beyond the Numbers.
This is the only show dedicated market development show that brings you updates on deals and key headlines shaping your business today.
Well, Winston, just a few hours ago, we had our president address the nation, and he mentioned a number of things that is happening, the magic we're seeing in our economy as well. And one particular thing that I was so keen on seeing what the next move is going to be is the topic of transport, and also on women as well, where he mentioned that Women's Bank in months to come will be rolling out to empower women in business and all of that. I think that was a very good one. But anyway, every time I hear all these policies, my only concern is implementation. Absolutely.
Sometimes, in regards to the Women's Bank, I just want to see the real policy structure because there are proposals that basically just empower the local banks to have women desks, basically, so that if government has any funding, you can access it from the women desks in any branch of any bank. That way there's accessibility instead of getting the whole structure of a bank that every nation, every district must have. So basically the overhead costs concerning how it's go by. But let's see how the government intends to roll it out here in Ghana in the coming month. So let's begin with what is happening in the key business community. Now, President Mahama announced during a national address that remittances from Ghanaians abroad hit $7.8 billion in 2025, the highest ever recorded, providing a major boost to the country's foreign exchange reserves.
Well, away from that, recent data from the Ghana Statistical Service show that inflation in Ghana's building sector continued its downward trend at the start of 2026, easing to 3.9% in January from 4.4% in December 2025.
Also, fuel prices are expected to rise marginally in the first price window of March 2026, according to the Chamber of Petroleum Consumers. Petrol is projected to increase by 3.59%, diesel by 1.52%, while LPG may decline by 1.57%.
Well, away from that, according to the January 2026 Monetary Policy report by the Bank of Ghana, the government of Ghana's total expenditure for 2025 stood at 194 Ghana cedis 94.36 billion Ghana cedis, I beg your pardon, falling 24% short of the projected 250.31 Ghana cedis. The underspending was largely attributed to lower interest payments supported by easing domestic interest rates and a strengthening cedi.
Now, away from that, Ghana's external debt recorded a sharp decline of 86.7 billion Ghana cedis, falling from 416.8 billion Ghana cedis in December 2024 to 330.2 billion Ghana cedis in November 2025, largely driven by the appreciation of the Ghana cedi. Meanwhile, domestic debt rose marginally to 314.5 billion Ghana cedis.
Well, also, Ghana targets 127 tons of gold annually from the artisanal and small-scale mining sector under sweeping new reforms. Finance Minister Dr. Kasiel Atuforson told Parliament that the Ghana Gold Board will purchase at least 2.45 tons of ASM gold each week as part of efforts to formalize inflows estimated to exceed $20 billion annually.
Now, away from gold, let's go to cocoa. Ghana's licensed cocoa buyers owe banks up to $750 million, raising fresh liquidity concerns within the financial sector. The debt burden comes as lenders continue to recover from the country's recent economic crisis. Meanwhile, weak global demand has led to falling prices and surplus supply in Ghana and neighboring Ivory Coast.
Again, Finance Minister Dr. Kasiel Atuforson has defended the Ghana Accelerated National Reserve Accumulation Policy, describing past reserve building strategies as costly. He disclosed that Ghana owes $1.5 billion to Eurobond holders in 2026. The government now aims to adopt a more cost-effective reserve accumulation strategy.
Now, from the gold, let's get to the oil sector. UK-based Tullow Oil has signed an agreement to acquire the FPSO Prof. John Evans Mills for $205 million through a subsidiary, Tullow Ghana Limited, with completion expected by the first quarter of 2027, subject to regulatory approvals.
Well, you want to stay with us because we've got more for you on the show. Market Watch is up next. Please stay.
To Beyond the Numbers, my name is Winston Takan. I'm with.
I am Michelle Ejekun.
Amazing. Let's go straight to the market where we are assessing how key performers have been in terms of stock exchange and who are selling the most, who are the laggards, how much was lost and how much was traded in this week under review. It's been a very interesting last few weeks in terms of performances on the Ghana Stock Exchange. To help us with this analysis, we have Grace Monayu, Data Bank Research Analyst, to give us more insight on what is happening on the market. Grace, it's good to have you with us this evening. How was the week?
It's been pretty well. I'm hoping that ends great on the market. I mean, we've closed market, but still compiling this. We are hoping to see the final results.
Amazing. When it comes to the economic mood, basically, we understand anytime the president speaks, he allows or sends some signals into the market. How did the market anticipate the state of the nation, and how would you foresee in the coming weeks, basically next week, to open the market? How will investors behave going forward?
Right. Currently, we don't expect the market to continue to, trade in the southwest. I mean, there's been increased interest on the stock market since the beginning of this year. We expect that to persist into next year. I mean, first half of the year, after dividends are paid, after all the results are out, we expect also that investors have received some clarity. There's assurance in the market that currently the market is performing well, that there's currently stability on the grounds, inflation is down, policy rates are currently at desired levels and even expected to get lower. So investors are sure that the market is pure, the market is ready, the market is conducive for any investments you put in. So we expect that the announcement, the read and the address will continue to fuel investor demand on the markets, both fixed income and then the equity market as we currently see.
Well, Grace, so the Ghana Stock Exchange has introduced strict rules to curb price engineering, among other things. What do you think are the risks that are promoting this decision?
Right. Michelle, I don't think it will be fair on the market to some stocks if you can just move the share price at any volume at all or with any volume you trade. So there's kind of limitations. I mean, these rules have been in existence for a while. These are just reiteration that a certain number of volumes cannot move a certain share price, except it's within a certain price currently trading. So I think it's fair on the market to maintain fairness and stability in the general market, so we avoid anything to do with price manipulation on the market, so that investors are sure that, okay, whatever you receive on the market is a fair value and you are not cheated in any way. So it's a step in the right direction, if you ask me.
Great. Interesting enough, Car Bank just this week released their financials. Some other financial stocks on the exchange also did the same. What is your assessment of their performance, and basically what should you expect in the coming month?
Right. We don't have all the numbers, like you rightly said. Some have released this, the likes of Car Bank, the likes of First Atlantic Bank. The numbers are quite well, especially Republic Bank Ghana. The numbers came in strongly, and I think it was sort of an expectation from the general markets, knowing well that we are currently stepping out of the impact of the debt exchange program. Most banks or most financial counters are recovering strongly with their NPLs, loan books growing so strongly. So we quite expected some decent numbers to flow in, which the market is currently seeing. We're expecting the rest to release somewhere next month, which starting off from next week. So we know what exactly the financial sector is looking like after the whole DDP program last, which is the impact of the markets last year. We expect the numbers coming in to remain strongly, as the leaders have already shown to us in terms of the companies that have released so far.
Well, Grace, still on the issue of the new rules set by the Ghana Stock Exchange, do you think that companies will now require setting approval before they initiate any buybacks?
Right. I think currently what is trading is fair, and I think the markets will sort of absorb whatever is happening. I mean, it's fair. It's a market. You don't make certain rules knowing well that it will harm the market. Whatever the rules are, I believe it's for the best interest of the general market. And companies will be able to abide nothing to hurt the markets in general, but it is something that will promote trading on the markets fairly, if you ask me.
Now, which stocks basically performed well this week, and what should we expect in the coming week, especially both the laggards and those who are leading, basically?
Right, this week has been very pretty, like a strong activity on the market. We've seen the likes of Access Bank rise all the way to 35 cedis as of close of yesterday's trade, and that is record high. We've seen also the likes of Cowbank dropping with what I believe will be some profit-taking activities, but we expect that to bounce back and trade in terms of price gain somewhere next week. We've seen the likes of GCB. We've also seen the likes of Republic Bank Ghana trade in the positive territory this week. We've seen SIC coming strongly, Clydesdale also making headway into the positive trajectory. Next week, though, we expect most active counters to end in the positive trajectory. Most of our top pick for the week will be GCB Bank, Societe Generale, and some of the insurance counters. I mean, two of them listed on the exchange, which is Enterprise Group Limited and SIC. We expect that MTN's financials will come in today. That was the announcement, and I believe today the market has not really paid much attention in terms of price movements on the share price of MTN Ghana. We believe it's just a move of a wait-and-see approach to the numbers that we are expecting to come in. And once that is done, investors are able to dilute or digest the numbers they present. That should pave way that should influence investor engagement on the market in general. So next week, we expect GCB Bank, Societe Generale, SIC, Enterprise Group Limited, and then maybe MTN Ghana to make headways in terms of price stability.
Thank you very much, Grace. So we'll certainly be checking up on what is opening the market, especially in terms of performance and where we should put our money in the coming week. Thank you so much, Grace, for being with us.
Wait, but Winston, before we go, I want to ask Grace a very personal question.
Okay.
Yeah, so looking at all the listings and how well the market is doing, if I'm a new investor and I want to start my investments, where would you advise I start with? Like, which listing would you say that it's a good start for me as a new investor?
Well, as a new investor, it means you will need some understanding on how the markets operate. And usually, as a start-off, we will recommend that you speak to a broker who will give you clarity on what you're looking out for. Some investors are risk averse, others are risk lovers. So depending on your risk level, we sort of recommend which market you should go into. But all in all, the stock market is performing well this year, and I believe investors can make good takes out of it.
All right. Thank you very much, Grace.
Thank you very much. You know, some people have the perception. I was speaking with someone quite recently, and the person thought the stock market is just like going to buy something from the storehouse. It's a different owning shares or part of ownership of a company publicly is what is being displayed on the stock market. We'll be bringing you more information here on Beyond the Numbers, but when we come back for the big analysis, we'll go to the big address by the president this afternoon, listing the key performance that they had to encounter this year, their policies, their structure, what they have done, what they have failed to do. All these, we will be breaking it down here on Beyond the Numbers. We will be joined shortly by Caleb, who will be dealing and diagnosing the key figures right here. So stay tuned. We'll be right back. Welcome back to Beyond the Numbers here on the JoyNews channel. And this is the big analysis where we break down the big topic and the big issue that has to do with today's agenda presented by the president himself, President John Dramani Mahama, regarding the state of the nation. And certainly he had to get information from all the ministries that are working on his behalf and address it to us as citizens. And certainly you watch from home on the JoyNews channel. You saw the commentary going to the market, how MFA and Noel, all of them assessing the mood of the market. I'm not doing this alone. I'm doing this with the chairman himself.
Caleb Zublen.
Oh, it's a pleasure, my brother. Great. So we'll go to the numbers, but we'll be joined also by data scientist Alfred Apia, who will be joining us on Zoom to give us more clarity, because we've been following. We did a pre-analysis beginning of the year, what we should expect this year, and the president has highlighted some key development. But we want to start with some of the things he said, basically, and before we delve deeper to the numbers and speak to Alfred as well. So, Caleb, you were monitoring, I was also monitoring. And first of all, on the economy, the president said something very interesting. Can you take us through?
So he said, as he promised, he confronted the crisis that we faced. And then, according to his assessment, the government had delivered on that. And then they've set us on course of what the NDC calls their reset agenda. So that's how President Mahama started his State of the Nation's address for 2026. And then, we've done the analysis so many times on the macroeconomic indicators. And then, it all starts with the exchange rates, because once the government, did their thing with the exchange rates, most of the other economic indicators followed through. Inflation rates came down on the back of the exchange rates. And also the public debt has also reduced substantially, mainly because of the exchange rates. And we'll get into what caused the exchange rates to come now. We've done this so many times. It's mainly about gold prices and how the governments have been able to take advantage of gold prices and all of that. I don't think we'll be getting much into the other social parts of the nation address, but I just want to put on record that I'm not, particularly satisfied with the way the president spoke about galamsey, because you know how it's a very topical issue, and then I was expecting to hear more, maybe announcing what you do to some DCs in the areas where small illegal mining is still going on. But then
we know the EPA is now being mandated to spend a huge amount of money to ensure restoration to some damaged or deforested areas.
$35 million for just one river.
Huge, and that is a topic we'll be hitting on definitely to see the ripple effects, economic cost of we destroying our own water bodies, the environment being destroyed. All these will be hitting it here on Joy, calling on the president himself to be sure. Every time on radio, we keep highlighting the need and how urgent that particular decision has to be taken. Many were still calling for the shoot to kill. However, there's the need to ensure that any policy direction, with the NIMOs still on the floor, every week, Erastus keeps sending updates on the social media and championing the areas, people being led, key DCEs in most municipalities using government facilities to mastermind all these. Some of the development, even the president himself reiterated that the kingpins are still there. After 1 year, the kingpins are still kingpins. What is happening to the structure there? But before then, the exchange rate was one of the key conversations he highlighted on. But take us through where we were and where we are now. What is the huge difference? What happened from the BOG perspective and to the Finance Ministry's angle as well?
Okay, so somewhere last year, the early beginning of last year, January 2025, the city was doing, I think, 14 cedi 70 pesos to $1. And then it went up to 15 cedi 50 pesos. It stayed there for some time. Yes. And then we saw this dramatic, appreciation of the currency. And it stayed relatively around the same level from 10 to 11. Interestingly, that's the band the president gave, between 10 to 12 band. Yeah. So we think the BOG is actually, trying to keep the...
And we got the hints here on beyond the numbers first, before any of the houseless had that information.
Yeah. So we're currently doing 10.6, and then the lowest we've seen so far is about 10.4. And that's when the finance minister, early January, decided to pay some debts forward. We know some Eurobonds were due later in June this year. The finance minister decided to pay it early on because of the appreciation of the currency to 10 cedi 40 pesos. We're currently doing 10 cedi 60 pesos. Now, majority of the macroeconomic indicators that follow happens on the back of the exchange rates. And we've done this before. But then I think focusing the State of the Nation address on the real economy, how this is going to impact the growth of the economy, the growth of the private sector. I think that's the most important part, in my opinion. And I don't really think the president hit the nail on the head on that part, because understanding from businesses or giving an indication to businesses of what they should expect, because you've dealt with the macro indicators. We understand the city has been very stable. You've dealt with inflation rates and all of that, but then wanting to understand the policy direction moving forward, so how that's going to impact the businesses moving forward. And most importantly, the unemployment situation. And the president also made some remarks about 1 million people being employed last year. We've done some checks. That doesn't turn out to be the truth, because from the Statistical Service, we've seen about 300,000 jobs from Q1.
That is 330,000. I was even at the press conference. And initially, if you make that assessment, the government was quite positive. About 15 million people are active in the job market, and about 330,000 haven't employed. That is the number. But the president indicated about 1,000 people, 1 million people. And these numbers need to speak to the facts. And so if we're looking at the labor market, you mentioned the CD being a key factor. That is something the business community we're looking forward to in terms of planning. Exactly. They want stability. If you look at the stability of the city, where it fell from a high of 14 Ghana cedis to the tune of 10, around 10, 12 there, the band was quite important. When they are importing their commodities, look at what happens to car prices. When the dollar, the city was dancing to the dollar's tune, vehicle prices were high. If you go to every automobile store, they tell you that because of the city dollar. And even you go to the market, Mokola market woman who sells tomatoes every day, you go there, she'll tell you that the price has increased because of the dollar. You wonder whether she goes to the imported, when basically most of the manufacturing is done locally. But these are the market movers, things that triggers the market pricing. So anytime this happens, people are actually expecting a ripple down, because if that is the same foundation for your price increment, then that same foundation is being dwindled down. They should expect a ripple effect, basically, but it doesn't happen that way, because people say they price to old they marked to old prices, and when the fact is then they have to recoup what they've lost. Somehow it makes business sense, but doesn't make economic sense in terms of how we can ensure that this prices reflect in the household cost going forward.
And sometimes understandable from the business community, because there's always a lag between the macro and the micro. There's always some time that it takes for the macro to trickle down to the micro. But then again, usually governments have a way of trying to stimulate that and then stepping in between to try and make the micro move faster to the household and all of that. But then again, this and the transformation that we are all looking for hinges on the back of the private sector. And then the president did speak about the 24-hour economy and how the bill has now been passed. So now there's a 24-hour secretariat which is going to be in charge of championing the 24-hour economy. But then again, the last time we saw a policy document was last year, and that was a policy for the 24-hour economy. But then that was a proposal. When it came out, it was a proposal, and we spoke about it. We had analysis of it on the show here. But then we don't know which parts of that proposal has been accepted yet, and which parts have been communicated to businesses.
And it's a humongous document proposal. If you go through the stages of the 24-hour economy, how much of investment is it going to, what is the sources? Is it still going to be from the petroleum sector? These are key questions we want to understand from the full document, basically, because if you're going to fund a structure, is it just you creating a conducive environment for these businesses to thrive? What is the ban for power usage, electricity? Are these companies who are going to run 24-hour economy going to basically benefit from some price reduction? If they benefit, who is going to pay for the shortfall? How is government going to intervene? All these are key questions we need to understand and have clarity about going forward. Many of the political related policies we keep hearing, they have ripple effect. Imagine when those times when we went through COVID, they said free water. There is nothing free in terms of how much you take. All those who took the water, they came to tell you that, hey, you have to pay. So certainly we should be quite careful anytime any president, any person, any authority is speaking, there's a likely cost that we'll face. And if not today, we are shifting that cost going forward.
And then I think on the cocoa sector too, that was something very topical in the climate. We're always talking about the cocoa sector, and the minority came out with some cocoa pods in their sort of demonstration. Well, I think the president has to speak about the cocoa sector because it affects so many families. Over 1 million direct, and indirect jobs are created through cocoa farming. And also, I think the price of cocoa on the world market didn't help us, but then there are always ways, and I was even calling for a reduction in the farm gauge price because that's a more sustainable solution. But then again, you also have to think about the farmers, and I think some more engagement will happen with the farmers, and then also try to understand taking cocoa board out of this situation because they are still distributing fertilizers and scholarship schemes when there was an agreement that they're going to phase out of that kind of market. So if the government is doubling down on these other activities, is that leading us to another meltdown in the future? So I think most of the main indicators, starting from the exchange rates, we understand how that trickled down to most of the macroeconomic indicators, which the president did speak about. But then that challenge that into the private sector, which creates jobs, the job the president was talking about, most of them should come from the private sector because the government already, the wage bill is too high. And then, every year, the wage bill and interest payments are the top two expenditure items for the government. So the government cannot employ everybody. It's not possible. The 24-hour economy, the government is not going to have a double staff in all the ministries and all the agencies. That's not going to happen. It's going to come from the private sector. So understanding these policies again is very important. And I don't think the president did justice to that, in my opinion. And then I think moving forward, we need to understand how the private sector...
I think because of the time constraint, probably he has to just highlight key sectors.
Yeah.
If he's going to go down to every activity within the sector, trust me, everyone in the office...
It was quite a long speech.
Everyone in the office will have a 24-hour service in their offices, and that is something that we'll definitely be breaking it down here. We are still live here Beyond the Numbers. We are going straight to Alfred Apia, a data scientist, to give us more insight. Apia, I'm sure you were following the conversation, and also Caleb and I were highlighting some key development, but which basically caught your attention when he was making his presentation.
And what was your assessment?
Yeah, I hope you guys can hear me.
Yeah.
Okay, so I mean, like you guys were talking about, at the macro level, right? You can point to so many different things that are performing well, and usually I usually like to refer to 3 indicators as like the ones that impact people's personal economies, right? So you have inflation, you have interest rate, you have the movement in the foreign exchange. So as long as those are usually doing well, you'd expect people to be generally comfortable, happy with the economic management. And like we always say, it is always about the sustainability, but also looking beyond those numbers. It's funny, this is a Beyond the Numbers show. So looking beyond those headline numbers and looking at, okay, what exactly is driving these things and how sustainable are they, right? So in terms of the overall economy and where things are going, I think, the government has done a lot of work there, right? In terms of, we've seen fiscal restraint, we've seen the city doing well and all of that. Debt situation, on the back of the city performing well. The public debt has also reduced and all of that. So those we can't take away from the government. Part of what I think about though is, and Caleb was making the point about the real economy, right? So how are some of these things translating into the real economy? So I look at things like, for example, private sector credits, right? Because we've talked about all these 24-hour economy and all these different government initiatives that are relying on the private sector. So how much of this uptake or how much of this improvement in the macroeconomic environment is now translating into, say, for example, credit to the private sector? We saw that last year, at least in the middle part of the year, that the credit growth was a little sluggish, right? It recovered towards the end of the year, and that mostly also was on the back of the declines in inflation. And so when I look at that and I think about sectors like construction, for example, where we are seeing that cement prices, for example, are going down. But when you look at the data that the Bank of Ghana shared, it shows that cement demand or cement sales have actually declined a little bit compared to 2024. And when I triangulate that together with things like the big push, it's like, okay, well, why is construction activity, because we use cement sales as the proxy for construction activity. So why is construction activity declining if we are doing big push, for example, right? So it's those types of things. But I think generally, like at an overall aggregate level, things have improved. The economy is much more stable. So then the question now is, how do we progress from that stability?
Alfred, I want to ask something. What if, basically, most of the cement that you mentioned, this price triangulation that you mentioned, basically some of them bought their cement bags before and they were in their warehouses, and therefore the demand might reflect that. Is that possible?
Oh, that's a possibility, of course, but I think, we are talking about what is happening on the average picture, right? So like you said, some people might have quantities of cement, some might not have any to. So I think, in every year you can have this situation happening, right? So I don't think that would explain it essentially, because in every year, some of these nuances that you're pointing out might happen. But when we look at things on an aggregate level and we see declines in cement sales, well, that should be something that we need to look at. And so that would be interesting to see how that translates into, say, construction.
Were you satisfied with the assessment of the energy sector and the key development government is trying to do to ensure that the ECG returns back to profitability and the privatization conversation in terms of ensuring the distribution angle is advanced to other private players?
Well, I think there has been significant progress in the energy sector. I think that even the fact that the cash waterfall mechanism is working as intended, right? And I have been someone that I've been tracking it for some time. And I think it's a simple thing, right? So, you take the money, you just distribute to the value chain players, so everybody has liquidity to operate. So even on that score alone, right, making sure that so we are not hearing IPPs threatening to shut down their power plants because that government owes them. And the government still owes them, but it's just that government is showing commitment to pay. So that's important. I think the ECG part, though, is interesting because on the one hand, we are saying that ECG is improving, right? Because we've pointed to its increases in revenue and all of that. I always argue that is tied to we know that is tied to tariffs, that's tied to demand. There's different things. So it don't necessarily mean that ECG is doing well. In my view, we need to see indicators around like the distribution losses, right? The collection efficiency, those types of indicators that take into account what ECG is buying versus how much it's able to sell and collect revenue on versus like the nominal values of revenues, which usually we like to throw around to show. So I think in that space, I would say that there's still a lot of evidence that we need to see to then say that is private sector participation going to change anything here, right? Like if ECG is already doing well, and the union actually ran with that because the union said, well, you're telling us our revenue has improved, we are doing all these things, so then why do you need private sector participation? So I think we need to get more data, and I'm hoping for the Energy Commission's report later in the year to see, okay, how have those indicators actually changed?
The unions always fight for their job security in instances like this because some of them foresee some layoff coming through should this happen, and also the market share being expanded. ECG will not basically control the market as they used to. Therefore, their power control will come down. But I want to understand from the president also highlighted the fact that now they've signed an agreement, they've paid all their gas debt and now basically they have current payment, and they'll make sure they don't have gas on debt. And how do you foresee it reflects in the performance of an energy supply, apart from little minor technical hitches that happen in some parts of the country? Before I come to
I think those, together with the plan to construct the second gas processing plant, I think those are very important things that would definitely reduce our dependency on expensive liquid fuels, right? Because we know that's what has been happening. We're talking about over $1 billion in procurements of liquid fuel for power generation. So if we are settling our debt on gas, if we're able to get more gas, because part of what I always question is we are flaring all these gas. And then it's like we also need gas for power production, right? So if we can use the second gas, if we can quickly build a second gas processing plant and be able to leverage gas, because we know natural gas is cheaper than liquid fuel, then I think we are making progress. So I think definitely the intention is clear, in terms of trying to shift the pattern of dependency on liquid fuels, which are very expensive, and that has been a challenge in the past. So on that score, I would say that the government is doing well. We will hope that all these initiatives are continued and that we get more clarity. Like I have always raised concerns about the level of procurement in the liquid fuels. It's a significant procurement, and we don't have a lot of insight into what happens.
Alfred, I'll come back to you shortly. The interesting aspect, some years back, the same moment, terrain, I feel the same way like right now, when former Finance Minister Ken Ofori-Atta also was having the best, Ghana's fastest economy, Ghana having all those numbers. We kept saying the projections, these one district, one factory, they were trying to drop those policies. I feel like we are at that same junction right now. Before we move to implementation, how those policies will reflect. It's a very interesting conversation, but before we come there, I want us to touch on the gold projection. The president said gold board was quite important to their whole trajectory, looking at how the reserves have come out, thanks to gold board strategy, which they introduced and allowed in it for what we are seeing now as an improved economy.
And it's interesting you came back to the 2019, 2018 era where things were doing great for the economy in the macroeconomic conditions. The difference this time around is that this time the economy is on the back of gold. At the other time, it was on the back of Eurobonds. So we used to get about $3 billion every year, which came back to show up a city. And once you have your city under control, most of the other indicators trickle down. This time around, it's not from Eurobonds, but from gold. And the risk there is much lower because with Eurobonds, you have to pay back hefty interest rates. But with gold, the thing is that the price of gold can tank any moment. Currently, the indications are the gold price will stay elevated for some time, and particularly because of who is in the White House now, and he's helping us a lot at the moment. But then again, he's a very unpredictable man, Donald Trump. He's a very unpredictable man, and we don't know if there's any policy moves that the U.S. might take, which might have an impact on the Ghanaian economy. But then again, we are talking about sustainability. Now, the government is banking its hope on gold. The president said they released a national accelerated reserve program where they want to start buying more gold from the small-scale sector, about 103 tons of gold from the small-scale sector. That's a lot. That's a lot of gold.
Yes.
And they also try and get some from the large-scale sector, about 20% from the large-scale sector, which they'll refine and then will add to the BOG's reserves, and also from the small-scale sector mainly for forex accumulation and then support the city and all of that. But then again, this circles back to the question of illegal mining, because we are going to be buying 103 tons of gold from the small-scale sector, and then again, we've plugged out all the smuggling holes. The president highlighted that in his speech again, that there's no more smuggling of gold out of the country. So again, we have to be very strict on illegal mining and traceability. Goldboard is working on a traceability system. Hopefully that comes out as soon as possible. Once that happens, we can definitely say that the government is not buying guaranteed gold.
You know, interesting now, we see the Ministry of Lands and Natural Resources at one hand working with NIMOS to combat these miners. We see Gold Board on the other hand buying this gold from miners, most of them about 20% from the large-scale miners and the rest from artisanal small-scale miners. That's what they call it. And where does the illegal miners, where do they sell their gold?
Yeah.
That's the key question. To whom do they sell to? Which access do they have? Do they still have illegal routes?
Yeah.
Because we've seen Gold Board arresting some individuals for selling illegally, and also there are only few who have been able to meet the assayers in the market who are able to sell gold to Gold Board. Yeah. And Gold Board has a very, if you go through their policy document, very stringent requirements to be a seller, to be someone who broker for them on their behalf. And if you go through their structure, I kind of admire how they went by it. But the fear and the risks that many are not projecting evilly, but basically it's reasonable to assess any commodity that has the tendency of international conditions determining the value is what we are looking for. Cocoa has the same thing. That is why Cocoa Board has to go through a reformation, restructuring, and we hope these policies that were released by the finance minister will be able to reform the cocoa sector. But Gold Board is a fresh baby. The CEO, Sami Jenfi, reiterated that the tracing system is likely to begin in March. We are yet to see how they're going to roll it out. There's so much work going on. And one thing I like about the Gold Board structure is there's always conversation with the players, the small-scale miners, the associations. Quite recently, I saw their interaction at UPSA, where he met some of the farmers discussing how they can reflect some new policies and regulations. And that is how the industry is supposed to carry along with the players and stakeholders, and I foresee that happening in the gold sector. And that is a smart move to go. Else, if you decide to give this instruction from your office and expect the players to just obey blindly, look at what has happened to our cocoa sector. If the CEO decides to say, I'll reduce the cocoa price from Accra, and someone goes there and tell them otherwise, they'll believe that person, because proximity is very important. Who gets to them? There are instances where the farmers are supposed to get information. Some of them don't even have access to phones. Some of them don't even know what is happening in Accra. All they know is the LBC is coming to buy their product and giving them their monies.
Yeah. And again, we're speaking about sustaining the gains, whether that is sustainable in the future.
Consolidating them.
Consolidating the gains. Yes. But then again, if you look at the policy document from the finance ministry, they're still going to buy gold at spot price from the small-scale miners. Yeah. And this is a cost that the government says, is very small, because if you compare that to borrowing on the international markets, it comes nowhere near the interest rates you pay. But then again, these are costs that pile up. Last year, the cost was on the BOG's books. Moving forward, where is that cost going to lie? Because once you're going to buy gold at spot price from the small scale miners.
How is Goldberg going to make its money to run its operation?
Exactly, and not even spot prices, but then they added a clause for premiums. So if you are going to pay spots or premiums, I mean, there's always going to be a cost to this. Yeah. So understanding where the cost is going to sit, whether there's a plan to eliminate the cost through the large scale purchases and all of that. And so I think the issue is about the sustainability of the situation, whether we'll not come back in 5 to 10 years' time and say Goldberg has $32 billion in debt, and now we are trying to struggle to clean up Goldberg's books. So understanding how the consolidating again, the macroeconomic conditions are very favorable for us at the moment. So understanding where the cost is going to sit.
Talking about favorability, we saw gold export increase from 5.1 billion in 2021 to 6.6 billion in 2022, as high, it quite doubled in 2022 to 2024 to 10.36 billion, and from 10.3 billion to a high jump when we saw the price rising, because we have constantly had our back on gold, oil, and cocoa.
Now the oil sector is not doing very well.
It's not doing very well. Look at what is happening to international prices. Yeah. And also investors are moving out to the market. Until recently, we've seen some new agreement being signed to extend.
I think the president said about 20 wells should be drilled soon.
Yeah, and that is instructive. But it's different. How that sector plays is different. Yeah. If they assess the market and see there's abundant supply by the oil marketing companies globally, those who are supplied globally from Russia, from the Arabian countries, all of them, they play key role, OPEC countries, all of them, OPEC countries basically. So these are very important considerations they take into factor before deciding. But we hope that as they promise they do, and when they do, we're going to see more revenue coming through. Already some have moved to our neighboring countries, Cote d'Ivoire. There are still arbitration in terms of ownership in some key bases in Ghana. But we hope those arbitrations are solved so that investor confidence will be recouped back. But let's go back to Alfred. Alfred, I asked a simple question. We were here before and we are here now. Going forward, what risks or caution would you say we should watch before we leap?
Before I do that, I would like to mention that the gold target in the small scale is actually 127 tons. So it's not 103. So it's actually, we are targeting more than
that. Okay.
We got last year. And I think Khalid made some very important points there. So you remember the large scale mines, right? We were getting 20% from them already. And that also was supporting the Bank of Ghana's fiscal gold reserves, right? And so what we are doing now is that, and we were buying more of the refined gold from them. Now what we are doing now is we're going to buy the raw gold because we want to support local value addition. So we're going to get the 20% in raw and then get them to process and all of that. Yeah. But what is interesting is that in the large scale, we are saying that we're going to agree with the large scale miners for a discount, right? Because we know that the raw gold is not sold at world market prices. But then when we talk about the small scale, what we are saying is that we're going to potentially use premiums. So part of what I start to challenge the government a little bit is that we have enacted laws. We've made the gold board the sole buyer of gold. We've made the laws. We've made smuggling illegal. We've done hoarding illegal, all of that stuff. So if we are failing to, and we still need to use price incentives to the point that the gold board potentially could even make losses based on that. Are we accepting defeat then that we cannot enforce the laws that we passed ourselves, right? And so on the one breath we are struggling to deal with galamsey, right? And then potentially we might be buying some of those galamsey gold also at a premium. I think that those are significant policy failures that we cannot simply ignore, right? So I just wanted to make those points. I think that I struggle to see how the state will be able to aggressively deal with galamsey while also ramping up export of small-scale gold. Because we know that, small-scale mining, that is where galamsey also thrives, right? Okay. And so if we're going, I struggle to see how we can responsibly do small-scale mining in Ghana, given our governance and all the issues that we have, right? We'll say that we've been here before, and I think it's important that the government has already signaled that. That's why the government is saying that we want to accelerate reserves, and that's important. But we just have to be cognizant of where all the other trade-offs that we'll be making, right? And it might not be explicit trade-offs that we say that, we are trading off between environmental destruction and building up reserves, but these are realities that we cannot run away from.
All right, thank you very much, Alfred, giving us insight there. Alfred Appiah is a data scientist. And also, we are moving on briefly. Caleb, you've listened to the whole of the State of the Nation address. Which of the conversations got your attention?
Well, there's no economic, but then what got my attention was the dual citizenship bill. That was not a government's bill that was submitted to Parliament. It was a private member's bill. But then the president has signaled that he agrees with the contents of the bill, and even urged Parliament to pass it fast so that he can assent to it quickly. That caught my attention. Understanding that how this has moved from a private member's motion or private member's bill to now the government accepting that policy proposal. That was interesting to me.
Last year or possibly early this year, JoyNews decided to embark on a poultry sales in collaboration with the Accra Poultry Association. Yes, and many people came to our forecourt and bought at very affordable prices.
Think about 50 cedis per crate.
Exactly, and I'm waiting for the Nkoko and Kitinkiti policy. I want to see it reflect, because if it happens that way, children who are going to school, Indomie sellers, it affects the key value chain, those who supply, and all that structure is very important. The farmers are saying, people are not buying, and the buyers are also saying it's too expensive. There will be influx, and there will be certainly demand in the market. So yes, I'm waiting for that policy and how it's going to reflect going forward. What is your expectation? Let the conversation continue on our WhatsApp and social media handles, and let's hear your say. We'll have an opportunity for you to also speak on the State of the Nation address, where possibly next week we'll open the phone lines on Beyond the Numbers to hear your take, and we ensure that your voice is quite loud and clear, and we go brave and straight to the point. Thank you for watching us today on Beyond the Numbers. My name is Winston Taki, and I did this with
Caleb Ziblin. See you next week,
Absolutely.
Monday.
Yes, and have a good business day as we enter this weekend. Take care, be safe.